Hello, everyone. This is Doc Severson with episode 12 of the Ready, Set, Crypto podcast. I chose today's topic because I'm seeing a lot of angry, frustrated investors having trouble in the markets, wanting to blame someone and point fingers at what they see is an injustice. And perhaps you're one of the angry ones, and I hope that today's topic will speak directly to you. The topic for today is, are the crypto markets manipulated? If they are, you're probably wondering, how can the little guy ever expect to win? I get this question 10 times a day, and it's difficult to answer without getting kind of deep and philosophical, so I'll try to answer it in a way that I hope that you'll understand. It really comes down to the perception that the individual retail investor is fearful that there are these huge, evil, institutional whales out there that hide in the shadows and seek to take advantage of the little guy. First off, let's get some definitions out in the open. Webster defines manipulation as to control or play upon by artful, unfair, or insidious means, especially to one's own advantage. And in the crypto space, a whale generally means someone, whether they're part of a larger institution or just by themselves, that owns a significant amount of Bitcoin or other cryptocurrency. When we put these two together, the common assumption is that crypto whales are manipulating the market to their own gain at the expense of the little guy. Now, is this manipulation happening? Yes, it is happening, and probably on a daily basis. Is this something new? No, it's been happening for hundreds of years. Where have you been? Does it only happen in the crypto markets? No, it happens in every single market that I've ever traded in over the past 2 decades, and it will continue long after I've hung up my spurs. Is it illegal? It is not illegal unless you're a publicly traded company acting on inside information. It is not illegal to sell a significant portion of what you have and cause disruption, even if you buy it back seconds or minutes later. There are regulations against dumping shares of your own company in the stock market without advance notice, but no rules against this that I'm aware of in the crypto space, and certainly no rules against dumping assets in crypto if it's not your own company. So there you have it. Manipulation in the crypto markets happens frequently. It is generally practiced by larger whales pushing the market around to their benefit. It is not illegal to do so. It's been happening for hundreds, if not thousands of years already, and will probably continue to do so in the future. However, it will be somewhat different, as you'll see. Now, some of you are probably shocked that I'd be so frank about the fact that it's happening, and so far in this chat, you might detect that I'm somewhat dismissive about the outrage. By the end of this little chat, I hope that you will have a slightly different perspective about it. But first, I'm going to have to pull out some analogies to help you understand how and why this manipulation occurs. And then I'm going to discuss how to get on the right side of it. So we've gotten through part 1 of my response, which is to agree with you that manipulation in the crypto market is occurring. Now we're going to move to part 2, which is to explain why this is occurring. One of the biggest issues with the crypto market is liquidity. Right now, there's just not a ton of trading activity yet, even though there have been periods in the past where it was very liquid. But liquid markets get pushed around. This is nothing new, and it happens in any worldwide market, not just crypto. To help explain this, in a normal soccer or football match, there are 11 players on each side. The ball spends the majority of the time in the middle of the field, and only occasionally are there attacks against the other goal. 11 players works out pretty well until someone gets a red card, and then the dynamic changes. All of a sudden, there are fewer players out there, and the ball moves more freely, especially against the lighter team. This is also what happens during a power play in hockey. Markets that are lighter on one side versus the other also see the price pushed in that direction against them. If there is light demand and big supply, then the law of supply and demand dictates that the price must move lower to find balance. Now imagine what would happen to a soccer match if there were only 3 players on each side. The ball would go from one end to the other in huge swings back and forth. This is an example of an illiquid market and one that's easily manipulated by someone or something with deep pockets. Got that picture? See how liquidity affects the volatility of that market? Now imagine the opposite, a soccer match with 22 players on each team, for 44 players on the field in all. Imagine how the game would progress. It would be like a preschool soccer match with a huge scrum of players around the ball kicking at it and the ball not really moving much in either direction. The latter example is sort of how today's U.S. stock market operates. There is so much liquidity and so many millions of participants that it's like a virtual scrum around the price, and a 10% move in the equity markets is a really big deal and normally takes weeks to occur, where we can see that occur in the crypto market in one day. It can be manipulated, and I'm talking about the U.S. stock market here, but normally only for seconds at a time, and maybe for fractions of a percent when it does happen. So manipulation occurs today in the biggest and most regulated markets on earth, but because there are so many participants causing massive liquidity on both sides, any imbalance is rectified in seconds, and often less time than that. Now, the crypto market, especially for altcoins, is more like the soccer match with 3 players per side. It's very easy for someone with deep pockets to push the price around, often with only a false rumor necessary to kick off the movement, as we've seen lately. And this is why I think it's important to get institutional involvement into crypto. We need at least 11 players on each side, as you can bet that all of those institutions are not going to be on the same side at once. It will be a much less dramatic tug of war for price discovery on a daily basis. More adoption, more institutions, and more participation means that we'll see a much more fair and much less manipulated market. Now, I could go into all the different types of schemes as to how someone could manipulate the markets, such as pump and dump or buying them to sell them later, fake news, and so forth. But honestly, it doesn't really matter precisely how they are doing it. When you have thin markets, it's akin to how a single snowflake can cause an avalanche if the conditions are right. There will always be different ways to move the price around if markets are thin. Okay, so we've defined manipulation and we've talked about the root cause for why it happens. Let's finish it up with part 3 by discussing how you can avoid being a victim to this. And there's no better way to illustrate this than by discussing the simple remora. The remora is a type of fish that attaches itself to a shark and provides a benefit to the shark by eating parasites off of the shark's skin. And then they eat small bits of food that are left over after the shark has a meal. The remora is the ultimate example of, if you can't beat them, join them. And it's how I'd like to think of yourself as a retail investor. You are not going to win a head-on encounter with a whale investor, any more than a flounder has a chance against a shark in open water. This is one thing that I've been taught for years, is that you want to trade alongside the big money and not against it. There's plenty of opportunity for all, just don't fight the tide. If you trade with your ego and want to take on the whales, you will lose. Trade along with the whales and you give yourself a much better chance to win. Surrender your need to be correct about what you think the future should be, and instead focus on trading with the trend which the whales define. Yep, you can claim that it isn't fair, but it hasn't been fair in financial markets for hundreds of years, and it won't suddenly become fair tomorrow. The best way to thrive and survive in financial markets is to part ways with the majority of the retail herd of investors, known as the dumb money, and become part of the smart money. Now, I could spend an entire hour on how to become part of the smart money, and I wouldn't even scratch the surface. But let's throw out some simple ones here. 1, if you want to be part of the smart money, don't place a hard good till cancel stop loss in a thin market. The whales will go stop hunting and flush you out of what is probably still a good trade. Number 2, if you want to be part of the smart money, don't chase moves because everyone else is. Learn to be contrarian and sell when others sense that it's time to buy. Or just fade every bullish call by CNBC Crypto as a start. Number 3, if you want to be part of the smart money, don't overreact to every news item, which is designed to flush out the weak retail hands. Have a longer-term perspective and look at daily price fluctuations as noise. And then number 4, tune out of the mainstream crypto news. The whales are using it to get everyone leaning in the wrong direction. Make decisions based on the price and trends, both to it and only. So there you have it. In summary, yes, the markets are manipulated, but all of them are. And crypto is especially vulnerable to it until we get more players on both sides. Get over your outrage by learning your history about how markets operate and understand that in a fair, two-sided market, there are both buyers and sellers. The market can go down just as easily as it can go up. No one is going to look out for your interests any better than you are. So don't look for some regulatory agency to swoop into your defense. Trading is war, and you have to figure out which battles that you're going to fight. As you get more experienced, you'll figure out which ones are worth fighting and which ones to avoid. I talk about these exact points in our daily market update video in the Ready Set Crypto Premium newsletter. I use charts and techniques to help me understand which way the whales are moving the price, as well as which battles to fight and which ones to avoid.
And that's it for this video. Thank you so much for watching, and please consider subscribing if you haven't done so already in order to continue to see high quality cryptocurrency analysis and advice. And don't forget to hit the bell right next to the subscribe button in order to be notified when we put out a new video. Also be sure to watch some of our other videos and visit our website where we've got more free cryptocurrency education, a free intro course, a free book, and a free newsletter. So definitely check us out. Thanks again for watching. This has been Ready Set Crypto, and I'll catch you in the next one. Cheers.